English Forward presents.
Today we're going to be chatting to Alexander Kish, the CEO of Unchain Custodian. He was the former head of securities and forex Asia Pacific at Swift. And just want to welcome you to the English Forward podcast, Alex.
Well, thank you very much for having me.
Yeah, it's a pleasure. Can you tell us a little bit about where you're from, where you're based in the world?
So I'm originally a Belgian citizen, so born in Belgium and worked there until 2012. And then I moved to Asia, so about 7 years ago, with Swift to Singapore with the objective of doing business development for Swift in the region around securities and FX products. And recently, in end of last year, I was approached by Da Hongfei, the founder of Neo, as well as Unchain Custodian, to start a custody business in Singapore, a digital asset custody business. We started that with about 3 people, and then now we are 10, offering our customers what we believe is secure, but also user-friendly and with value-added services, digital asset custody service in Asia Pacific.
Okay, excellent. It's interesting, and obviously you've got your reasons. I'd love to explore them and hear. You know, you left a really big career at Swift and joined quite a small team in the crypto and blockchain space in Unchain Custodian. What made you make that move? What were the reasons?
I guess twofold. I was personally interested in blockchain and cryptocurrencies probably starting around 2013 when I read the Satoshi paper, when I started getting involved in terms of knowledge acquisition of what is blockchain, what is crypto, and progressively got convinced through my readings that it was something to watch for. So I did invest a few dollars into Ether and Bitcoins and other type of tokens starting around 2016, 2017, not to the point that I could be a billionaire today, but enough to understand how it works and enough to have some sort of a nice return still. And obviously at Swift, I started advocating about Swift looking at blockchain and understanding what the impact would be on Swift itself, and became progressively a champion of blockchain, talking to conferences, at conferences around what Swift was doing around blockchain, distributed ledger technology, what discussions and dialogue we were having with our custodian customers at Swift around the custody of digital assets. And at one point, when opportunistically I got this call from a headhunter looking for a CEO for a custody service, I said, well, why not? 18 years at Swift, time for a change, maybe time for a new challenge. And after having gone through the interview process, I decided to accept the position.
That's really interesting because, just having read about you, and you certainly are a very accomplished man. And I think possibly the change, there's a lot of personal desire and wanting to change things in the world and make a bit of a difference. But if I had to ask you, who is Alexander Kish and what does he stand for, what would you tell me?
I believe that the current financial and banking system is not really reaching out to whoever needs it. So part of what drives me is trying to do good for society in the sense of there's no reason why certain investments should be limited to certain investors. There's no reason why some people on the planet would not be able to pay something because they don't have a bank account. So those type of situations makes me want to change the world in a way at my little modest level. And I found that crypto and blockchain has that capacity of banking. Unbanked people has that capacity and that opportunity to bring investment opportunities in a fractionized fashion to smaller investors, and I really wanted to be part of it. I'm working for Custodian, which is part of a the market infrastructure required for enabling all of that. I have friends working in projects that are more directly connected to people, but I think that participating with my expertise and my experience and in a back office type of way to supporting that ecosystem is what drives me, really.
Yeah, I think it's wonderful. I think we've got very similar ideals because, from an education standpoint, we're obviously looking at products that will impact people in the developing world. And the one thing that limits people from actually accessing education is a medium of exchange. Mm-hmm. So it's the simple thing of not being able to access and use funds to access education that limits people's potential to develop and what have you. And I agree with you. I think with crypto and blockchain, we certainly can do a lot of good. And I'm really so encouraged by the wonderful people I speak to that all believe that, which is really excellent. Mm-hmm. So Alex, your experience at Swift and the foundational principles that you learnt as a custodian and in that environment over the many years that you were there, have you been able to transfer many of those into the blockchain space?
I think it's more around best practices as well as the need for example, for standardization that I'm trying to contribute to the industry. So best practices would be ensuring that the long established customer protection practices that we have in place for custody in the traditional space can be replicated to the crypto space. There is no reason why investors in the crypto space should not be treated the same way that investors are in the traditional capital market space. That's one. The second one is around trying to collectively build a infrastructure that is interoperable and standardized. So I'm involved in a few standardization initiatives, both at ISO level, so the International Standardization Organization, and other levels to ensure that if an investor needs to connect his system to 2, 3, 4 custodians or 4, 5, 6 exchanges, it can be done through, for example, a standardized set of APIs, rather than having to implement each time a different set of APIs or different types of connectivity. So that's probably coming from my Swift and my Swift standards experience, where it has been the work of Swift for the last 40 years is really standardizing how banks are transacting with one another. So I think that can be replicated in the crypto space.
Yeah, because that's actually something that's actually lacking in the crypto space at the moment.
Absolutely, and I think it's understandable. It's a new industry. As a new industry, I think a lot of people believe that it's going to be a winner takes it all type of game, but I don't think it will. I think there will be many blockchains coexisting. I think there will be, and we can see that with exchanges, hundreds of exchanges coexisting, and there's a need for the benefit of the users and our common customers to be able to transact with each of those layers or those players in a seamless and standardized way and non-ambiguous way, meaning that when you trade an asset, you understand that this asset is effectively the asset that you're trading, and there's no technological confusion around how the asset should be priced and how the asset should be identified.
Yeah, I think that word sums it up seamlessly, because it is a complex field, and as you say, we're right at the beginning. So to develop standardized systems that actually, work in that environment that just allow people to transact in a transparent manner is actually critical. Mm-hmm. And obviously that works around creating a good operational environment. As a crypto custodian, how do you do that? What are the elements that you need to create a good environment for people to operate in?
So it's 2 levels. So you have the operational and the technological environment. So the technological environment should be not shy of investment in terms of money investment. It's not trivial to put in place an enterprise-grade technological environment that will secure assets of millions of assets of customers. So that's the primary, in a secure way, of course, and in a cyber secure way. So that's the primary objective of a custodian, is to make sure that the technology put in place has been properly audited by neutral technological cybersecurity auditors to ensure that it's not that the code is right, that it has been properly implemented, that the access level are secure. So that's on the technology, and then you have the operations, where you need to make sure that the individuals who are running the platform, who are and have access to critical information, both in terms of privacy data as well as crypto holdings, obviously, are not in a situation where they can collude with others and steal crypto, not in a situation where they can individually have access to the holdings of our customers and steal it. So all that is all about operational environment with the right checks and balances in place, ensuring that not one person in the organization, including myself, has the power to move assets without the authorization of the customer. It's also about screening the people and ensuring that they don't have, for example, depth issues or credit issues that would push them towards being tempted to do something bad. So it's a lot of components, very much close to what a bank would try to do when they operate for the benefit of their customers. It's not very different, with the difference that in our industry, I think it's probably easier, strangely, to get hold of private keys, and when you get hold of those private keys, you hold the assets, which in a bank or in a custodian about equities and fixed income, it's not that simple.
That's, I mean, I know there are lots of challenges in a traditional market as well as in a crypto blockchain environment. But if you look to the future and you think what solutions blockchain could offer, how could it actually better the transactional process and the security in a blockchain crypto environment?
So how can we ensure that this environment can be secure and sustainable?
Yes, just more sustainable and improve the security, because I think that's probably the biggest concern with people.
Yes.
Yeah.
Well, I think it's going to be a combination of solutions that are targeting institutional players and solutions that are targeting individual players. So custodian services like we offer are really targeting institutional players who have millions in holdings, and that includes crypto exchanges, for example, who have unfortunately proven that for many of them that they're not able to secure the assets of their own customers, to ensure that at the infrastructure level, these assets that are invested in and traded and used for financing projects through ICOs or STOs or IEOs, whatever the term is at this moment, are doing that in a transparent, and that's important, and secure way, so that their investors always know where their assets are and that they are secure. On the retail side, I think we should be able to build solutions, and I don't think that's there yet, where you shouldn't know or you shouldn't care about, as an individual, that your payment or your investment is actually powered by blockchain and crypto assets. It should be transparent to the individual users. And I don't think we're there yet, and that's why the mass adoption that we're all hoping for is not really yet happening. Crypto and blockchain is a million of people story. It's not a billion of people story at this stage.
Yeah.
And I think one of the reasons is because it's not very user friendly yet, and also because we don't focus enough, or we focus too much on the technology and not too much on the benefits it can bring.
Yeah, no, I think I agree with you. If you think back to how we all started with the internet, I mean, most people don't even know how it works, but we all use it.
Absolutely.
And your point is, if you get to a point with blockchain where it's completely user friendly, you're going to have the same situation where people use it every single day and whatever their transactions are, but they don't fully understand how it all pieces together. They just trust it and they use it. Where are we all going? What was it?
I always share this anecdote. I remember when internet, I think it's probably in the 2000s, where you could start buying stuff on the internet using a credit card. Nobody was trusting it. Yeah. Never at the time, I remember I was saying never I would put my credit card on the internet to buy, I don't know, a book from Amazon. It's
Yeah.
ridiculous. But at the same time, progressively, you see the security layers are improving. You see your friends doing it without any fraud and any issues. So you start doing it, and then now I'm doing it almost every day.
Yeah, now we talk about new markets and new solutions, and people are skeptical, and you go through the whole thought process again until you get the mass adoption. You know, it's interesting with, how do you find with like institutions and exchanges and people? Because generally when industries start, people have in-house custody solutions and they try and do things themselves instead of outsourcing to a specialist. And either they don't have the time to do it properly or they don't have the team to do it properly. And what you're doing at Unchain Custody is actually putting in a solution that can take those problems away from people and allow them to actually focus on their businesses, their actual core value. How do you find the mind shift in convincing people to switch to a service like Unchain Custodian rather than trying to do it themselves?
It's progressive. So I would say that we still need to do a lot of education. But in all honesty, the education is kind of fulfilled by the news that everybody sees in the press with regards to exchanges being hacked almost every 2 weeks on average, as well as even horror stories that people reaching out to us from crypto funds, for example, explaining us that they've lost a private key because it was sent by email to someone for transaction signing. Yeah, and you're like, okay, are you joking? I mean, I think there's a lot of education that is still required. And that's what we also do, and not only on-chain custodian. I think all custodians around the planet are trying to persuade people that they should be, as you just rightly pointed out, they should be focusing on their core business of intermediating buyers and sellers if they are exchanges, investing into projects if they are VC funds, or managing the assets of their customers if they are asset managers or fund managers, and leave the custody part, the securing of the access to the assets to professionals who are 100% dedicated, both in terms of money, resources, human resources, and research and development on the best technology and the best solution for that part of the equation. So I think it's progressing. We do see more and more people reaching out to us rather than us having to reach out to them. I don't think it's going to be everybody will be on third-party, neutral, independent custodians next year. It will take time, but I do think that I do see that people are seeing more and more the benefits.
Yeah, I think, you know, we spoke about a little bit earlier about creating that operational environment is so important, especially with security, because it takes it out of the realm of people that aren't focused and specialists in an area and puts it in the hands of people with the proper checks and balances in place that can actually administer and oversee that. That's a huge benefit to a business. Let's talk about on-chain custodian and what it actually does practically if there was an exchange or an institution, and how that solution could be implemented to, you know, really provide best benefit to that company.
So for the core business of a custodian is obviously to secure access to assets. So what technology would do is ensure that if you are storing as digital assets, being Bitcoin or utility tokens, for example, in our infrastructure, they cannot be accessed by anybody else, only by the customer, and that's what we working on. The additional value of having a custodian is that you're able to prove to whoever you are holding those assets for, being an investor or a participant into a project, for example, that you effectively are holding the amount of reserves you said you were holding, or the amount of crypto capital you raised during an ICO that you said you would keep for 2 years for business development after 2 years, for example, that you effectively doing what you said you would be doing in a white paper, or that you said you would be doing into your terms and conditions. So the fact that you are using an independent third-party custodian helps, I would say, building the trust with your own customer base. So that's the first advantage. What we also do, obviously, is offer a single window access to multiple blockchains. So if you are a exchange or you are a fund manager who wants to do self-custody, you kind of have to be able to cater for different blockchains, different protocols, different tokens. Yes, there are wallets that can help you doing that, hardware wallets, soft wallets, and so on. But when I'm not sure you want to start holding millions of US dollar worth of assets on a USB stick that you put in a drawer or in a safe, even if it's multi-signature. So that's where we bring. It's a technological enterprise window, single window access to multiple investments that you can view and get reports and audits from a single source. And thirdly, it's all about building an ecosystem of partners that can help our customers have access to, for example, lending platform if they want to lend their crypto, or staking services if they want to stake in a POS type of blockchain, if they have the holdings to do that, or also to OTC brokers that we have vetted and that we trust will be doing a proper job if you want to sell your position. So it's not only about the core, it's also about building an ecosystem of partners that can help enhance the experience of our customers with regards to the crypto that they hold with us.
Alex, talking about trust, how do you establish trust in a brand new industry? So if I was an institution or an exchange and I wanted to use as Unchain custodian to look after a portion of the ICO funds, for future use, and I needed to convince a board to actually do that, how would I demonstrate and establish trust with Unchain?
Multiple levels. The fact that we are a combination in terms of management and board of crypto players and traditional capital market service leaders, I think does help. So we've been approached, or when we approach customers, they do like the fact that we have been founded by Da Hongfei, who was one of the very early blockchains fathers, I would say, in China, and knows the technology and has multiple projects going on. So that helps. It also helps to know that the background of the management team, we all from banking or financial services type of backgrounds in the execs. So the combination of the two is reassuring. The backing that we have, so we are Series A backed by Fosun, DHVC, and Sequoia Capital. So those type of backing also brings some level of security or certainty about the viability of the projects long term. And then it's all about, in my view, consultative selling, in the sense of being able to listen to the customer, explain what we have as a base product, and see and also together decide on how that base product should evolve to meet all the requirements that that specific customer has. So it's really about building a partnership rather than building a client base, in all honesty. And that so far it has been successful in the sense that we have persuaded about, after having launched in April, which is only 4 months ago, around 20 customers to onboard with us, to trust us and to build together our respective businesses alongside one another.
That's excellent. Well done. Because I think, getting the first 1 or 2 customers is maybe extremely difficult, because you need to, they need to take a chance with you. But as you develop and you establish trust, it certainly becomes a lot easier, because you've got a demonstrated, run or track record of success.
Mm-hmm. And I guess transparency is also very important. So you might have seen that I'm quite visible on LinkedIn, and as well as the team, to show what we're trying to do, to explain what we're doing in terms of standardization efforts and building the industry. So that it's not only for branding and marketing purposes, it's really to contribute to the dialogue and the education around the need for third-party custody.
I think that's so important. not just being visible in the market so that people can establish trust and know that it's not a solution that's here today and gone tomorrow, but it's a lasting, viable solution that's going to make a greater impact on, you know, the markets, which is excellent. Alex, you know, if you look at traditional custody services versus what you guys do, and you look at cost, because that's a big consideration in any company, you know, obviously traditional custody services can't do what you do in the blockchain space because they're different assets. They're not geared up for that. Is that a big factor in people making a decision to use a third-party custodian?
Well, clearly, an asset manager or a more traditional asset manager or fund manager who would want to go into the crypto space will naturally look at the existing custodian network that they have and ask them, are you able to secure those type of assets or take custody of those type of assets? We are in a gap period where we are able to do that, and those traditional custodians are not yet able to do that. Some are trying, or at least planning to do it, but they either very limited in terms of the coins that they can manage, or the timeline that they have in mind for enabling those type of services. So I do see our role as, at this stage, first to serve the traditional crypto space, if I may call them the traditional crypto space, which is around people that have been in that crypto industry for many years and are in need of third-party custody because they realize that doing it themselves is a challenge. So that's our primary customer base. But I do believe in the future that it will expand to more traditional asset managers, fund managers, or private bank, where for who have their own customers asking them for solution. They don't feel comfortable doing it themselves, and we are in discussion with a few actually trustees and private bank who have that demand from their customers and do not feel comfortable doing it. So they are approaching us in a way to do it in a partnership model where we provide the know-how and the technology, and they provide and they keep, I would say, the trust and the branding, as well as the capital requirements and licensing that their customers wants to have. So I think it will be more and more like that. We will slowly but surely see custodians, traditional custodians like Standard Chartered Bank or others, State Street and others, go into that space in a trial mode and collaborating with existing crypto custodians like us and others to make that happen. And most likely in 3, 4, 5 years, you will have some either joint ventures or mergers or acquisitions of big custodians, acquisition with smaller crypto custodians, just to make sure that the customer experience on their side is smooth and integrated.
Yeah, it makes 100% sense, because as crypto assets grow, that need will grow, and obviously the larger established custodians are going to need either departments or partnerships that can look after that type of asset. Mm-hmm. Now, traditionally now you've obviously got two real ways of storing private keys, which is either hot or cold storage, and they've both got their benefits and their challenges. You know, with ease of use and decent interfaces and UI experiences and what have you on the one side with a web-based sort of hot storage, and then the safety of taking a private key and storing it on a USB drive. But that's a lot slower, and access to those type of private keys are a lot harder. Is there a solution you guys are working on that would be a middle ground, that would provide a good user experience, but also ease of use and security at the same time?
Absolutely. So our version 1 that we released in April when we launched is a traditional multi-sig cold storage environment, which requires effectively the multiple people, and I'm talking about individual people in our case, having to approve a transaction using a hardware devices to sign or to multi-sign the transaction. That's not what I want as an end product, but it is the product that many people need for, especially long holder, who are not there to actively trade their assets. They're happy with that, and also because it's the only thing that is really insurable easily for a startup like us. So we have that cold storage that will stay, but will be we currently working on our version 2 of the products which will complement cold storage, that will offer a more dynamic and automated access to tokens. And we have different models there. You can use a hardware secure module, HSM type of solutions with a strong software layer on top that will manage the governance or have the governance itself managed in the hardware secure module. That's one. And then you have a new, not really too new, actually, it's more, probably a few years old, but getting now being mature, which is called MPC, which is multi-party computation, which allows you to do multi-sig in a way, but online. And the way it works is that it will, when addresses are generated, the signature protocol used is actually a mathematical process that will take place based on multiple secrets or piece of keys, if you wish, that are dispersed in multiple environments. So those, let's say you need 5 out of 7 of those secrets to be gathered around for that signature to take place. Those pieces of signature or those secrets will be hosted in 5 different technological and geographical environments, making it almost impossible to hack in the sense that a hacker would have to go hack 5 different places to get hold of sufficient information to have access to that algorithm that will sign the transaction ultimately. That's quite powerful.
Is that directly on the blockchain?
It's not necessarily managed on the blockchain. It can be hosted in the cloud. It can be hosted in HSM somewhere in a physical location. And that's the beauty of it. And you can really select a diverse way of hosting, which makes it even more complicated to hack, because you really need to master different types of hosting and access in order to get a hold of all the information you need to sign transactions on behalf of someone else. And on top of that, those secrets or those tokens that needs multiple of them for signing transactions are reset on a daily or or weekly basis, depending on your setup, which makes it very difficult for hackers to get a hold not only on of those secrets, but also to use them before they are being reset effectively. So it's kind of a multi-sig, but on online.
Yeah, it's really interesting. And what is the optimum number of signatures that you find would create the best security balance to ease of use, I suppose, or efficiency?
I don't think there is a firm answer to that. I think it's more based on thresholds. So if you are doing 1 BTC transactions, you probably don't need that many secrets to be evoked for the signing of transactions. If you are in a multi-million transaction, you probably need more. So, and that's what it's interesting with this technology. It is configurable based on thresholds, based on patterns that you decide what they should be, to ensure fluidity of transactions as well as security.
Yeah, that's very interesting, and yeah, it makes complete sense. And we spoke a little bit about adoption earlier, and you know, when you get a huge amount of people, 1 billion people, whatever, adopting the technology and using crypto, it changes the whole market in the face of it for all of us. But there are obviously certain challenges to creating mass adoption. And what do you think the one thing could be? What would be a catalyst that would actually tip it in the favor, moving it towards mass adoption, that would really make a difference to the whole environment?
I might surprise you, but I'm going to say more Libra projects. I think if you talk to the crypto industry, many people are very negative about Libra, because some say it's not even a blockchain, some say it's not really decentralized, or if it is, it's in limited fashion. But when you look at existing public blockchains, I'm not going to name them, but many of them are not properly decentralized at this stage, and it's normal because they need to grow, they need to build an ecosystem, and then once you're sure it's working, you then become completely decentralized. The only example of fully decentralized blockchain is really Bitcoin and Ethereum when you think about it at this stage. And Ethereum, some people would argue the opposite. So I think more Libra, and why do I mention Libra is because Libra brings its bads and goods. The good part is that it definitely democratize, or at least bring the concept of blockchains in crypto to the masses. Everybody's using Facebook, everybody's using Visa, everybody's using PayPal. So everybody has to be attentive to it. It also brings attention to crypto and blockchain to all regulators in the world that can no longer ignore the phenomenon. So we'll have to take a stance. And that's where maybe the bad will come, is either it's going to be well understood and therefore will bring benefits to the whole ecosystem by the fact that they will agree on clear rules and clear regulations on how those assets should be managed, how players dealing with those assets should be regulated, or it will be the opposite and it will close the door for a certain period of time, 2, 3, 4, 5 years, to more projects being able to emerge. So the jury is out. We'll see what the impact will be, but nevertheless, I think it does bring the benefit of educating about this type of environment to the masses.
Yeah, and I think, I mean, your comment about Libra, I think, is very well founded, because the more people that, you know, are prepared to put money into a system, the more liquidity it actually creates, and that allows more projects to be developed and the whole ecosystem to grow.
I would just have one wish, is that actually Facebook stops running the project and they delegate that to other members of the association, the Libra Association, because currently the debate is polluted by the past Facebook privacy issues that they had, which has nothing to do with what this crypto blockchain project could lead to in terms of unbanking the unbanked and so on.
That actually goes back to the core of decentralization and transparency. And I think if they do divorce themselves, you know, from their legacy problems and create a solution, it's actually a very positive thing for them, because it certainly does allow the unbanked to participate in, you know, global economy, which is what the system actually propagates and promotes. So if it goes that way, it'll be fantastic, because it'll educate a lot of people. I think the education that's the underlying core, is that, you know, people are always scared of new technologies until they learn about it and become familiar with it. And that's really interesting.
And in our region, it's Southeast Asia, in my region, it's incredible how Facebook or Libra implemented on Facebook or WhatsApp, the impact it could have. I mean, taking the example of Vietnam, for example, when anybody buys a phone, they get automatically for free a data access to internet Facebook. So for them, internet is Facebook. So they get access for free to Facebook. That's the basic offering from some providers of telco in Vietnam. So you imagine that these people obviously are relying on Facebook in the sense that this is the only way to exchange information at this stage. Information, maybe in the future value, in a very, very, very cheap way, in the sense that they only need a phone and a telephone line and a SIM card, and the rest is handled even for free in terms of data through their Facebook app. So whether or not we like Facebook doesn't matter too much. I think we should also look at how powerful such a implementation could be for many people.
I think it'd be wonderful, because we spoke right in the beginning about having a means of exchange being the only thing that excludes people from sometimes even local economies, because they can't buy a tomato, or they can't invest in a textbook or whatever it is, because they don't have anything to exchange. And if they can, you know, develop the sort of financial side of, you know, Libra or a similar type environment, it just blows it open for everybody, which is fantastic. I know you believe in the tokenization of the economy. What does it mean to you?
tokenization of the economy means what we've just discussed really is about being able to to create a fragmented ownership of assets that today are not utilized in terms of collateral, are not utilized in terms of investment opportunities, are not utilized in terms of payment mechanism. So what do I mean by that? Real estate is a good example. If you want to invest in a real estate project today, you can buy your house or an apartment. You can buy a REITs product, which is not very accessible to any players really. If you ask the people on the street what a REITs product is, he's going to say, I don't know. And that's really it. The rest, the people having access to a real estate investment, such as a resort in the Bahamas, are private equity investors who know those type of projects, who know who to talk to have access to those type of investments, when the mass has no access to it at all. The same for fine art, the same for many assets, including golds, where you don't really have the opportunity to invest in those assets unless you are a qualified investor or someone who knows. I think tokenization can make this can democratize access to those type of investments. And I do see a world where in the future, maybe in 15 years from now, where I would even be able to, I would be able to collateralize the purchase of a house using my cryptocurrencies, a basket of cryptocurrencies and tokens representing an investment into another real estate or a Picasso painting. Why not? Anything is possible, really. We don't really know what tokenization can bring, but the fact that it creates liquidity, fragmented liquidity that can be easily exchanged at a very cheap cost on primary and secondary markets because of the blockchain and the tokenized form that they have, will bring significant opportunities for investments, payment mechanism, collateralization mechanism when needing a credit from banks or non-banks, and so on and so forth.
Yeah, I think you're right, because I mean, you certainly get access to a lot more assets. Like at the moment, if you put your money in a bank, or a bank has custody of your money, you might have exposure to maybe a property fund or a mutual fund or a unit trust or something like that, but you might not have access to a piece of the Mona Lisa or a Tesla or whatever. So it certainly makes it very, very interesting. And yeah, it's gonna, we're gonna look back in 15 years' time and say, wow, these things we thought about them, whatever it was, it's actually far better. And that's the wonderful thing about the industry that we're involved in. I wanted to ask you about real estate, because obviously with education, there's a lot of challenges in raising money. But essentially, if we consider the current education system and the need to raise money for education, you could possibly even tokenize an institution and then use that building as collateral to put up a scholarship program or to build a new computer lab. I mean, is that feasible?
I think everything is possible with this approach, as long as the quality of the asset you are tokenizing or the investment you are tokenizing is there. As I always say, if you tokenize rubbish, it's still rubbish at the end, right? So yeah, the underlying asset will always be critical, but at least when you have quality products or quality projects that people believe in because it's properly managed, because it's properly put in place, the legal structure is right, the capital market, the financing and economical makes sense, having it accessible to more people than the usual suspect will be beneficial. And I think, and I would add, having an access to individuals sometimes will lead to investment into those projects that would never had investment from banks or other type of traditional investors. So it's a bit like a crowdfunding mindset that I think blockchain and tokenization can enable on projects that people want to invest not necessarily for the economical benefits, but also because of the almost like a charity, almost because they believe in that project and they believe in the value of that project. So in the education system, as you just referred to, I think it could be a mix of both. People interested in the economic potential benefits of investing into that new library in this university, but also in the fact that they believe in education and they want to participate in that way.
Yeah, no, it's 100% right. And I think that's where Unchain Custodian actually provides an amazing service, because, you know, people want security. And I wanted to actually ask you about, you know, security with insurance. In that environment in blockchain, like obviously in a traditional environment, insurance companies back it and it's easy because they know it and it's been proven, etc. How do you get that trust from a big insurer? Was it easy to get insurance in a blockchain environment?
Very timely, as we are about to sign an insurance contract. So yeah, it was not that complicated, to be honest. We had we started in April, so we took the time to we had to take the time to, of course, prove through interviews and discussions with underwriters, insurance underwriters, that we were worth to be insured, but that ended up positively. So we are about to sign an insurance contract, and it's not that easy. The coverage is not what we wanted to have initially, but at the same time, we're starting. The premiums are still quite high, but it's understandable, because when you put yourself in the shoes of insurers, it's still a very new industry. The risk starts to be known, so they very comfortable with cold storage, but they not necessarily comfortable with hot wallet type of approach. We coming up with many new technological innovations, like the MPC I just mentioned early on, the multi-party computation. So those type of things, they need the time to learn and assess the risks and price the risk. So that explains why it's not that easy, despite the branding, despite the track record to ensure this industry. But what we've been doing as well, as part of that education, that process that we had with our insurance broker, is educate. So we had recently a seminar where we invited about 12 to 14 insurance companies in Asia to listen to what we're doing, listen to what the crypto industry is trying to achieve, explain them that it's not only about, it's not really not about money laundering, and it's not about frauding the system. It's all about inclusion. It's all about finding a new way of moving value around the world, and that they are technology providers, they are service providers that can secure those assets very effectively. And I think more of those sessions will be needed for the insurance industry to be comfortable, fully comfortable with us, but I think it's part of the process.
Yeah, I think you're right. You know, with the cost being very high for the premiums, it's probably because there are not a lot of insurance companies that are willing to sit around the table and negotiate. But as more and more come in, those prices come down and it levels out, and then you actually get a decent competitive product that everyone can use. You know, you right at the cusp and the forefront of creating a brand new industry, Alex, and new ideas and what have you. You're obviously a very highly motivated guy, and you're very passionate about what you do. What drives you every day to keep going and to maintain such high energy levels?
I always, on my CV, I have some sort of a motto that explains what drives me, which is learn always, be fair, are the two things, important components. And I guess as far as we are concerned here is really learn always. So the fact that I'm learning every day, every time I go to the office, our team is a mix of young technologists, very completely geeks in terms of crypto and blockchain, with a mix of old traditional bankers like me and others, and I think the mix of the two makes it very, very interesting. I'm learning every day. I have new ideas every day. They have new ideas that they propose me and it's really, really exciting. So what drives me is the excitement of learning every day, the excitement of inventing new services and products that either are derivatives of what exists today in the traditional capital market, or completely different and completely new.
Yeah, it's amazing. And just personally, do you have a formalized approach obviously these young guys are coming with wonderful ideas, and there's so much available out there, new technology, etc. How do you formalize your approach to sifting the good from the weeds and actually implementing the resources of the company and time to develop something that's useful?
Well, I don't think there's a miracle or a recipe for this. I mean, it's just about prioritization based on customer requirements. So that will be the basics of every decision making. So is the customer really interested in what we are trying to create? Most of the time, by the way, we get those ideas in discussion with the customers, so that helps. And then it becomes a prioritization exercise where people agree and disagree, and then we have to take a decision. So nothing very different from another company, except that, at least a traditional banking company, except that when we decide to implement something, it doesn't take a year and a half like it would take in a bank. It takes 2, 3, 4 weeks. And that's a major change.
Yeah, that's exciting, isn't it? You can see change happening really quickly.
Mm-hmm.
Well, Alex, it's been so interesting chatting to you. I really appreciate your time, and I'm certainly going to go and spend some more time reading up on what yourself and Unchain Custodian are doing, because I think you're going to make a big difference. And it's been great chatting to you. Just want to say thank you.
Well, thank you to you too. It was really great talking to you as well.
Great. Have a good day.
Have a good day. Bye.
Thank you.
You were listening to an English Forward production, the web's largest Learn English community and Q&A site. Everything you need to understand and improve your English. Visit EnglishForward.com.